Hello everyone, this is Tyler coming to you from Socrates Investing. Today I am going to answer a question that many people have often asked me and I think is just common on the internet. And this is, what is volatility and why does it matter? Okay, so imagine a situation where you see a stock that goes up like 15% and the next day goes down 20%, which this is a very common and typical situation. And um, the same um the same is to be said with many stocks. You see this over and over. And what often the term that people associate with this is volatility. um so the next question that most people ask is, what is volatility? um okay, so going to a very credible source, Investopedia, their definition of volatility is, it's a statistical measure for the dispersion of returns for a given security or market index. Volatility can either be measured by using the standard deviation or variance between returns from that same security or market index. Commonly, the higher the volatility, the riskier the investment or security. Okay, so as a way to understand volatility, I want to use a stock that turned heads last week in the trading week, and that was a stock known as TXMD. This was a pharmaceutical company, therapeutic drug that for a woman's healthcare company, which recently won its first U.S. approval on Wednesday, May 30th, for this new hormone therapy drug, which treats a painful condition triggered by menopause, and a condition that over 32 million women in the U.S. deal with. The drug is known as Imvexxy, and this drug by 2032 is expected to bring its peak sales of $650 million, and that's just for 2032. That's not to say 10 years after that it could even be higher. So that's that was a very great example of volatility. On one of those days, you saw an increase of roughly around 150%. And as traders, we're more interested in taking part in strong moves. And the thing here, though, also that is important is the type of volatility that's occurring, because there's positive and negative. So with volatility, it's you see good and then you see bad. Good volatility instigates profits and is generally a movement of the asset price on the upside, whereas bad volatility instigates losses and is generally a movement of the asset price on the downside. Okay, so in summary, in the pharmaceutical sector, when looking at volatility within stocks, it's often wiser to actually look at other factors. Now, that's not to say that volatility matters, but due to the larger size and diversified revenue-based structures and the frequency that often these type of companies have parent companies that they're structured under, such as Duran. Duran was a drug that's actually currently under the helm of Johnson & Johnson. And another disclaimer is that if these companies are under the helm of a major company like Johnson & Johnson, it's also a very good sign that they have a very good likelihood of successful exit. And why that is because these big companies will not take part in these in the operations of these smaller companies if they're not extremely confident that those drugs will be successful. So that's why it's often wiser to look at now volatility matters with those type of companies also, but it's the day-to-day volatility is not as impactful as like some of these other factors that are going on, and I think the surest way to know if you see a lot of volatility is look at who the leadership is, look at who if they're operating under a parent company.